Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're focusing on the shifting landscape of mortgage interest rates in Canada for 2024, a topic that's affecting both current homeowners and potential buyers in significant ways. According to Anjali Tamta's recent article, the Bank of Canada has made notable adjustments to its interest rates, which have had a direct impact on mortgage rates across the country. In October 2024, the Bank of Canada reduced its overnight rate to 3.75%, down from 5.0% in June. This move is part of a broader strategy to stimulate the economy by making borrowing more affordable, which in turn has led to changes in both fixed and variable mortgage rates. For those considering fixed-rate mortgages, these offer stability and predictability, which can be reassuring in a fluctuating market. Currently, the 5-year fixed mortgage rates from Canada's major banks range from 4.64% to 4.89%. Although these rates remain higher than variable rates, they provide a consistent payment schedule that can help homeowners avoid surprises down the line. On the other hand, variable rate mortgages, which are tied to the prime rate, offer more flexibility. As of October 2024, the best 5-year variable rate mortgage stands at around 4.85%. This could mean lower monthly payments in the short term, but there's a level of risk involved. If the Bank of Canada decides to increase rates again, those payments could rise, making it crucial to weigh the potential benefits against the risks. The Bank of Canada's decision to lower rates is aimed at boosting consumer spending and economic growth, while also keeping an eye on inflation. Lower rates can lead to increased demand for homes, but they necessitate careful consideration of personal financial situations by prospective buyers. For those looking beyond traditional fixed and variable mortgages, there are alternative options like CMHC-insured mortgages and home equity lines of credit, each with its own set of advantages and considerations. CMHC-insured mortgages, for example, allow first-time buyers to enter the market with a smaller down payment, while home equity lines of credit can be a flexible financial tool for homeowners with existing equity. Working with a mortgage broker can also be incredibly beneficial. Brokers have access to a variety of lenders and can help you find the best rates and terms tailored to your financial needs. They can also offer guidance on whether a fixed or variable mortgage might be best for your specific situation. It's important to avoid common pitfalls when choosing a mortgage, such as not comparing rates from different lenders or overlooking additional costs like insurance and closing fees. Ensuring that your mortgage term aligns with your long-term goals can also save you money and stress in the future. As we continue to monitor these changes, staying informed about the Bank of Canada's policies and how they affect mortgage rates will be crucial for making sound financial decisions. Whether you're buying your first home or refinancing an existing mortgage, understanding your options and the current market dynamics is key. Now let's shift our focus to another pressing issue impacting the real estate landscape in Canada, particularly in our major cities. According to a recent report from the Canada Mortgage and Housing Corporation, soaring home prices are making Canada's largest cities less attractive places to live and work. This is a significant concern as it affects not only the real estate market, but also the broader economy. The report highlights that high housing costs are discouraging migration, curbing investment, and undermining long-term urban prosperity. The deputy chief economist at CMHC noted that even a 1% increase in house prices in a destination city can make it less appealing, leading to a decline in the number of people moving there. This is a critical insight for cities as they plan for their future growth. The data from 1991 to 2020 shows that the proportion of Canadian households moving to a different municipality has fallen from 20% to 10%. This trend is particularly concerning for younger workers trying to enter the job market, as narrowing the pool of available workers lowers a city's attractiveness for investment and curtails growth. The report stresses that cities are not just for those who can afford high home prices. To prosper, cities need a diverse ecosystem of support services, ranging from transportation to retail, and essential workers like nurses and teachers. Building homes that support everyone is crucial for urban prosperity. To put the challenge into perspective, the Canadian Real Estate Association reports that the average home costs as much as $1.2 million in Vancouver, $1 million in Toronto, and $869,400 in Victoria. Prices in other urban centers like Ottawa, Calgary, and Montreal are also substantial, although Regina offers a more affordable average at $313,400. CMHC emphasizes that affordability directly impacts workforce mobility and economic productivity. High housing costs discourage Canadians from relocating to cities with better job opportunities, which hampers the country's overall productivity growth. When choosing where to live, Canadians consider multiple factors, including commute times, neighborhood amenities, and housing quality, all of which are influenced by housing costs. It's clear that addressing the issue of housing affordability is essential for fostering economic growth and ensuring that our cities remain vibrant and inclusive. As we move forward, it will be important for policymakers and stakeholders to consider these factors and work toward solutions that balance growth with accessibility. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder: Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time, and stay informed with the latest industry insights.